Hello traders, and thanks for tuning in to this week's market outlook from Exness. In this video, we're going to be looking at a potential idea for a trade over the next few days, the narratives that are driving the position, and what traders who were to take the position would need to be aware of in terms of economic data and other factors. But before that, we're going to be looking at the performance of last week's idea. The idea for a trade was a possible buy for your $1 from the area of $1.07. That idea has not been triggered yet, though it's possible that it could be valid still. However, if a trader were to take it, they would need to monitor carefully the result of the Fed's meeting next Wednesday. Now, for this week's idea, I'm Michael Stark, financial content manager, trading specialist. Thanks very much, Andreas, for being here. And thanks for having me. So what's the idea, Andreas, for a possible trade for this week? I am thinking of a potential short for your $1 against the US dollar, with a target around the 0.66 or even 0.655 price area data. However, we need to be careful since the pair is in a strong correction move. The price increased after an unexpected rate hike by the Reserve Bank of Australia earlier this week, and it's currently trading in the dynamic resistance area between the 50 and 100 moving averages. The 100-day moving average is acting as a resistance slightly above this area, while the stochastic oscillator is near the extreme overbought area, indicating that a shift to the downside might be imminent. And what do you think are the main narratives that are driving that possible move down by your $1 against the US dollar? So the narrative behind the idea is that the unexpected hike of the interest rates could be temporarily supporting the price, but once priced in, the Aussie could lose momentum. Also, if we check the 10-year Treasury bond yields chart of Australia and us, we will notice that there's an inverse relationship between the American and the Australian yields. The Aussie is gaining ground more aggressively than the dollar, meaning that the capital is flowing more aggressively into the Australian dollar rather than the American dollar. But these dynamics will probably change with major economic data about the US dollar coming in the coming days. So what do you think are some of the most important releases or economic other factors that traders will need to monitor next few days, next week, if they were to take that position? So in terms of economic data this week to watch out for is the Australian balance trade on Thursday, June 8th, and early next week, there's the US CPI publication on Tuesday the 13th, and the most important publication regarding all the USD pairs, the Fed interest rate decision and the press conference following the release on Wednesday, June 14th at 6 p.m. GMT, where investors and traders will be paying close attention to get some hints on the future actions by the central bank in regards to interest decisions. Okay, thanks very much, Andreas, for the idea. And in summary, this week is a sell for the Aussie dollar against the US dollar with the target area possibly around 66 cents or perhaps even lower than that, and the primary narratives that are the unexpected rate hike from the Reserve Bank of Australia, which possibly has a temporary effect, and the different impact of yields from bonds on the two currencies. And the most critical data to be watching is next week American inflation and the decision from the Federal Open Market Committee. But also this week there are somewhat Australian releases of relatively minor importance. This is just an idea for a trade. It's not a signal. It's not a guarantee. Do your own research and manage risk.